and welcome. This is going to be the introduction to the order flow course me and Jax are doing, and today I just want to briefly talk about footprint charts, how you can use them, and what kind of information you can get from a footprint chart compared to normal candlestick charts. And this is on the 5 minute time frame, and there's not much information you can get from a normal candlestick chart. Basically, you have the open, high, low, close, or for bullish candles, open, low, high, close, and maybe if you use it, the volume indicator at the bottom or in the top corner here. And if you compare this to a footprint chart, this is exactly the same area. You can compare those. Basically, it's a normal candlestick chart, but you have much more information being portrayed in the candles. So you have the candlestick open, high, low, close of the candle, and you have the open, low, high, and the close of the candle. You can also see the volume down in here, where you can change it in settings of the footprint chart. You can make everything show inside here. For example, the volume, it's somewhere inside of the settings. I'm not going to talk about this now. Just want to give you a brief overview about why we use footprint charts. So for example, you have each candle printing right here, and you can see the volumes traded at the bid as well as the offer. So you have volumes at each price tick compared to the entire candle on a normal volume indicator on TradingView, all down inside of this table. So you have the volumes at each price level, and this gives us a way to find out whether buyers are in control, sellers are in control, passive buying, passive selling, absorption, supply and demand can all be seen inside of a footprint chart, and this gives us the edge we need when we trade. So the left side basically shows aggressive selling and passive buying, and the right side of this column, of this candle, the offer shows aggressive buying and passive selling. So if you have large numbers on the bid and the candle moves down quite far, you can actually assume that the candle was mostly aggressive selling. And you can also see it at the delta down here. Delta is just the net difference between the ask or the offer and the bid. Okay, so basically, if you look at a random tick, for example, let's just look at this tick. You had 18 on the bid and 0 on the offer, meaning the delta of this tick is minus 18. If you look at this tick, you had 25 on the bid and 4 on the offer. This means the delta of this tick was minus 21. If you look at the table at the bottom of this page, you can see the delta of the entire candle as well as the maximum delta and the minimum delta. So inside of this time range, which is just a 5-minute chart, the minimum delta of this candle was minus 162 and the maximum delta was 110. The delta you can see at the top here is just the delta at the candle close, and these numbers let us determine whether buyers or sellers were in control during these 5 minutes. So for example, you can see we have pretty negative min deltas as well as negative delta at close. The candle moved down. You can see this kind of resumes up until this low. So we have negative delta throughout this entire range. Here you can kind of see we kind of bounce a bit. Price then proceeds to take out the slow. And you can already see, yeah, we had like minus 240 min delta, but the candle closed up here. This basically tells us that, you know, there was selling taking place inside of these legs because of the pretty strong negative deltas. Sellers were trying to push even lower, but it was caught by passive buying, which is why we have these large volumes on the bid, but basically no follow through. So price takes this low. It was met by passive buying. I'm going to talk about this in a future video. This is just too complicated for now, but just as a brief overview. If there is demand, people are willing to buy passively down here. Price is much more unlikely to just break through this level. So basically you have sellers trying to push through this low. It was met by passive buying. So the candle closed up here. We had a delta flip. Basically the minimum delta was minus 240. So sellers were trying to push through this low. The delta was down here at minus 240. It was met by buying, pushing the close back above the wick, the low of this candle. So it closed at 250 positive. It was met by buying, and then you can see this failed breakout results in more people actually starting to buy this aggressively and push price higher up until we get change in the supply and demand, which is somewhere up here. As you can kind of see, price was struggling to break through these highs, was kind of stuck inside of this range, and you have these somewhat large volumes on the offer, and then at some point it just starts selling off. So a footprint chart basically shows you the interaction between buyers and sellers. You can look at each tick, you can look at the deltas, the volume. You have to put everything into context. Like if you see this candle low and price runs through it, and you have these strong negative or strong numbers on the bid, but basically no follow through, you can actually assume that this is all passive buying down here. We have a change in the state of supply and demand. Basically you have much more demand down here, and people just started buying this and we just started to rip. On a normal candlestick chart you can't really see this. Like you have your price leg lower, you have your wick down here, which we were talking about, and people just assume that, oh yeah, we rejected this is a failed breakout, let's just buy, but this is fucking guessing. You cannot really determine whether buyers or sellers were in control just by looking at a candlestick chart. Like you have your volume indicator, but you know, it's not the same as a footprint chart. I wouldn't use this. If you look at the footprint chart, you can actually see the interaction between buyers and sellers at each price level, which gives you an edge when you trade, and you know, when you execute, you know exactly where to execute. If you look at the DOM as well, you can already see passive orders sitting in the market, and this is just really helpful when you want to execute, and yeah, gives you an edge in your trading. In the next videos, me and Jax are going to talk about deltas a bit more, as well as volumes. We are going to talk about different chart types. For example, this is a 10-tick chart. If we go back to the place, was it this? No, it was. Yeah, okay, fuck this. But I'm going to talk about different chart types, because you can use many different time frames as well as different types of charts. You have range bars, you have time charts, aggregated ticks, tick-based charts. You know, you can use a lot of stuff. This. So me and Jax are going to talk about TPO, footprint charts, delta, volume, the DOM as well. This is very important. People always assume that passive orders are not as important as aggressive orders, but that's just wrong.